live. Good morning to everybody. We are live and welcome to Behind the Markets. Welcome to the Tuesday edition, which we call Finance Tuesday. We'll be going through a bit of data today and we'll be going through a topic that is dear to everyone's hearts in our finance topic, Stephanie, budgeting. A topic we all hate to do, but we must do. I don't think if I ever met a person who says they enjoy budgeting, I think that person is a sadist. Um, Nobody enjoys being told that they shouldn't have that much freedom with their money. But anyway, yes. And the question that is going to go out to everyone, Stephanie, today is: do you run a monthly budget? I mean, do you have a budget, and how frequently do you use your budget? How frequently do
Do
you
you
run your
stick
budget?
to it? Yeah.
No, stick to it. That
Are
one
you
we
able
know
to
that.
get me?
I can get you,
Oh,
Stephanie.
okay. You're able to get me.
Yes, and a good morning to
Okay.
you, Stephanie. Sorry about that. I ran off. And a good morning to you.
Good morning, Munyumba. It's a very good conversation. And for me, it's not making the budget, it's sticking to the budget. That's what the problem is.
Amen. Amen. The real spiritual warfare is looking at the numbers that are in front of you and saying, I must stay within those limits. That is where
Yeah.
that's where I tell people you must start binding and casting the devil there. That's where he exists. But anyway,
Yeah.
let's get into the Finance Tuesday conversation as we get into the numbers and we get into some news stories. So firstly, let's get into our market roundup. The Kwacha did get weaker yesterday after a couple of rounds of getting stronger. The Kwacha was down 0.62%, while it's up. It rose by 2.03% on the week and up down 5.79% on the month and down 14.06% year to date. The all share index on the stock exchange rose back up to 1,968.76, up 0.16%, mainly due to CEC shares coming in. There is a lot of data coming in from results week, so we'll actually be going through quite a number of the results on the stock market. We're getting most of them have actually come in. We've also seen the bond index was up 0.7%, but in dollars down 0.49%, with interest rates dropping by 0.25%, by 0.0025%. Going up, you do see that the FX rate has continued on a loss-making trail, continuing to move up and away. We do see that there's some acceleration that's come back into the exchange rate, where the dollar is picking up some strength. The rand dropped a little bit, but then came back up yesterday by 0.74%, down to 2.24% of the week. There's a lot of volatility in the South African rand. That, I think, is one of my biggest concerns, because that affects a lot of our cross-border trading activity, which does then affect the low levels of inflation for those who are using imported products that are shipped in. Now, the other part we did see is that the GRZ bond index up 0.7% and also on an upwards movement. But in dollars, you can see it's moving downwards with a bit of a sneak upwards, mainly because of the volatility in the currency. So you can see that the USD GRZ bond index is actually moving according to the US dollar, while interest rates have zigzagged upwards but have continued to stabilize somewhere around 24.61%, up 0.97% on the year. Commodities yesterday, we did see copper move down again 0.59%, while we saw down 0.19% year to date, while oil is sitting 9% above where it was at the beginning of the year, up 0.54% as pressure keeps pushing oil prices up. We'll have a story to do with that. Gold up 0.47%. Now, our expectation of the pump price, this is where our expectations meter is sitting, 32.76. We expect petrol prices to move up to by 3 kwacha 34. That's our estimation, up 11.36%. So expect another hike similar to what we got last month. Another 10 to 15% pump price upwards, mainly due to the fact that global Brent price is up 7.46%, and the kwacha is up 6.356%. We don't know what component of this will deal with supply chain. Remember, the supply chain has also played a role in this. We'll be waiting for the end of the month, which is coming in about 11 days, to see what the price will be. But expect, as I'm telling everyone, on the 1st of October to see pump prices somewhere around the region of 32.76 kwacha. Expect that currently due to where things are going. Bitcoin was up 1.4%. As we're getting closer to the 2024 halving, we're starting to see the Bitcoin price moving upwards. But obviously that's a bit of optimism, and also the positive news that is seen. Bitcoin and Kwacha up 1.4%, mainly due to the strength of the Kwacha and also strength of Bitcoin. Ethereum up 0.4%, mainly due to the strength of the Kwacha, and gold up 1.1% as gold itself went up and also pushed up the gold price in Kwacha. In terms of our broad asset outlook, we have seen that year to date, as of the 18th of September, we have seen bonds up 19.4%, stocks up 25%, the US dollar up 14.1%, gold up 22.1%. This is all in Kwacha. Bitcoin up 84.1 and Ethereum up 55.5. Remember that this is also mainly due to the first quarter where Bitcoin outperformed drastically. And if you look at the current quarter, as we're trying to wind it up, bonds up 5.4%, stocks up with 11.3%, the US dollar is up 17.4%, gold up 19%, while Bitcoin is up 2.8% and Ethereum up 0.1%. So you can see a lot of volatility in this USD Bitcoin gold area. This is why we call it wealth insurance, and you should always advise not to keep less than 15% of your portfolio in these combined assets, because these are just insurance against the broad market turns, because you're always looking for stability in what you're investing in. We're looking at the global horsemen today. They are back. Global horsemen, we are seeing inflation reads coming out of China, coming out of Canada. Industrial inflation reads are showing that inflation is starting to pick up a little bit in strength. These are headwinds that are coming in. Mexican production has slowed down a little bit, showing a little bit of EM weakness. While we've seen that interest rates have still stayed elevated in Germany and America, and while housing starts have slightly faltered in Canada. So what are we seeing? Industrial sector that is slow or weak. We're seeing a growth sector that's also slowing down, while we're also seeing elevated interest rates with inflation that looks like it's starting to resurge back, especially due to higher energy costs. Keep an eye out on that, because that's going to affect the way we look out onto the market. But with that, Stephanie, let's get into our daily deep dives when it comes to the news. Our first piece of news is one of Zambia's premier, ironically using the word premier, one of the Zambia's main P2P lending platforms. Lupia did actually raise 8.25 million in a Series A funding round for expansion and growth. The Series A round was led by Alethea IDF Fund, which substantially participated with substantial participation from Incos Capital SA and German investment bank KfW. Now, the funding is basically going to be channeled to improving Lupia's technological infrastructure, and expanding its financial products and scaling its operations to reach more customers, with also the potential of trying to go into East Africa. So this is basically one of the signs that we're starting to get tech capital flowing into it and getting companies up to Series A funding. So with support of Althea, Incos, MasterCard, KfW, DEG. Remember, we did talk about the fact that MasterCard is going to be investing in about 13 African startups, 13 African fintech startups or fintech companies over the next 10 years. So this is probably one of them now. Basically, the Lupia CEO did say that they're poised to scale their operations, deepen their footprint, not just in Zambia, but around bordering countries such as in the East African region. Now, this is important. Remember that peer-to-peer is an alternative lending platform. I always tell people, be careful not to go all in, because it offers higher interest rates, but it does take higher risk. So remember to always balance your portfolio according to risk, because I've always seen people say, okay, bonds are only giving this much, but P2P interest rates are much higher. Now, though they haven't had massive defaults, the risk of default is still higher because the underlying assets are individual loans. Individual loans are higher risk than government loans. Than lending to the government. So always remember that. Now, that doesn't mean you don't participate in these things, and it's not the only one in Zambia. There are about 2 or 3 mainstream peer-to-peer lending platforms. Always make sure that you look for the ones that what gives Lupia and I think Premier the edge in the market is that those 2 specifically are in sandboxes. So in other words, they may not be outright regulated, but at least they are looked over by the Securities and Exchange and the Bank of Zambia to a degree. So at least you're seeing that they are getting guidance from the mainstream regulators who act effectively as a slight risk management tool, because they look into it. I have looked under the hood of some of these, and you do see that their loan default rates are actually pretty much at bank levels. But it's obviously, the test of these peer-to-peer lending platforms, especially this is what happened in China, is when they scale. They're all good and well when they start, because they usually are able to be selective about who can participate on them. It's when these loaning platforms start to scale that the misbehavior starts to happen, and you start to see P2P lending also get to risk of crashing and not being able to pay out its investors. So it's always a tug of war between these kind of companies, between growth and risk management. It's a very difficult thing for them because they're designed to lend to the riskier part of the economy, and they've got to find solutions to try and make sure they manage that. So in as much as, yes, this is an alternative investment, always remember that it carries more risk with it, but it is good to see our kind of tech getting this much $8.25 million in Series A expansion and growth funding. It's a strong signal, by the way, for the tech sector that it's able to raise this, and also for the African tech sector. And again, this speaks to the fact that if you're trying to get global funding into a business, fintech, again, is one of your biggest, strongest areas. So it is also testament to the fact that in the private equity space, fintech is one of the stronger players as well. So it plays along as many of those lines. Other news that came out for Zambia is that as of September 2023, Zambia is ranked the 15th worst, Stephanie, not best, worst performing currency globally. Down 11%, the kwacha has taken a hit against the dollar as private sector spending contracts, inflation rises, and the central bank begins an inflation-fighting rate hiking cycle. The Zambian currency is subject to uncertainty right now because of obviously debt restructuring, which it's still undergoing on the private side, and also dwindling copper production, which we at least saw reversed slightly in last month's trade data. So hopefully we'll be able to see that continue, the trend of copper production actually starting to come up. Top firms like MasterCard, PayPal, JP Morgan have warned investors that Zambia still remains in an economically unstable situation. However, Stephanie, what's even more sad is 8 out of 15 of the worst performing currencies globally are African countries. Zimbabwe, number 1, 617% inflation of the dollar. Burundi, number 6 with 36%. Egypt, number 9 with 25%. DRC, number 10 with 21%. Sierra Leone, number 11 with 19%. Rwanda, 12.8%. South Africa, 11%. And Zambia, rounding up the top 15 with 11%. We are part of the top 15 we didn't want to be a part of, Stephanie. That's a heartbreaking thing to talk about. Other news that we have seen that has hit the market is that the Chinese loans to Africa have plummeted to a near 20-year low. Chinese lenders have provided $170 billion worth of capital to Africa from 2000 to 2022, but lending has declined sharply since the 2016 peak. Just about 7 loans worth $1.22 billion were issued in 2021, and 9 loans totaling $994 million were issued last year, marking the lowest ever Chinese lending since 2004. China has always given more than $1 billion to Africa since 2004, and this is the first time they've dropped to the lowest. Obviously, the drop in lending comes as many African countries are struggling with the debt crisis. Obviously, China has been criticized for that. And China's own economic policy right now, where they're facing China's own economic situation, where they've got a declining property sector, a Chinese consumer that's weak, and a manufacturing and industrial sector that has really slowed down, mainly due to the weakness of the property sector. Chinese Development Bank and Export-Import and Exim Bank have actually now focused more on redeploying capital back to the domestic economy to try and help, while overseas lending is being restricted more to their neighboring countries. So they're lending more to other countries in Asia as opposed to Africa right now to try and rearguard and protect their main economic interests in that area. Just to show you, Stephanie, here's a graph of the Chinese loans that have been issued to Africa since 2000. As you can see, 2004 was the last time we saw anything below $1 billion. Then there was this massive spike that led up to about 2016, where China just went on a balling out of control spree from about 2009. One of the things that helped, by the way, is after the global credit crunch, China recovered its economy by making sure it went into heavy infrastructure spending and a strong infrastructure spending program that lasted until about 2013. So they've been really trying to boost. And then about 2017, 2018, that's when the Chinese trade war with Donald Trump at that time, when he was the head of America, really came in And that's when you can see the Donald Trump trade wars and the pandemic have really taken a huge hit against the Chinese lending to Africa. You could see it's been on a steady decline since 2017. So trade wars have really melted down, and China has never really recovered since 2020 in terms of lending to Africa. So you can see the Chinese loans to Africa have really dropped drastically since to the lowest they've been since 2004. And ironically, around 2017, here's something else that also picked up, is that the World Bank has now returned to becoming the #1 lender to Africa. In terms of percentage of loans to Africa, the World Bank has regained its position above China. In terms of, this is in billions of dollars, as you can see, China spiked and overtook the World Bank around 2009. And it was a grapple again, but they continued and they spiked at about 2016. World Bank has now continued to rise up, and you can see that China has dropped back below the World Bank around 2017-18 and has continued. The saddest part, I think, to me, Stephanie, is how a non-entity, the African Development Bank, has been in all of this. That is an underfunded, basically, and in terms of this, it's almost inconsequential in the conversation. The blue line at the bottom is the Africa Development Bank, who only overtook China when China basically dropped to its lowest, and that's back to basically the 2002. But Africa Development Bank has basically struggled to be a significant lender to the African economy. And this speaks again to Africa's dependence on non-African entities, and that's a very sad situation. Other news, Stephanie, that kicks in, oil price rise slightly as supply outlook offsets demand woes. Saudi Arabia and Russia are set to extend their supply cuts to extend a combined 1.3 million barrels a day of supply cuts all the way to the end of the year. Meanwhile, U.S. outputs in shale, which is alternative natural gas producing regions, is also expected to fall for a third month in a row to the lowest level since March 2023. So slow production in shale, cuts by Saudi Arabia and Russia, are pushing oil prices upwards, and that's why we're seeing that we're most likely to see 32, 33 kwacha at the pump by the end of this month. Saudi Arabia and Russia's output cuts could even lead to 2 million barrels a day in deficit in the fourth quarter. Subsequent drawdown in inventory could leave the market exposed to future spikes in oil by 2024. So in other words, and there are some markets already, by the way, Stephanie, where we're seeing $100 a barrel. Nigeria's crude Iboe surpassed $100 a barrel on Monday. So we already have some markets where crude prices are already getting to $100 a barrel. So that is already a big pump for us, getting back to Ukraine war levels with a weak currency. That is where the struggle may kick in. And you may find there's a lot more inflation pressure. So expect the transport sector to kick in a little bit of inflation pressure. That's the major outlook for everyone on the market. One, Rupiah has raised $8.25 million on the market. Zambia is ranked the 15th worst currency in the world as of the 15th of September 2023. China's loans have dropped to the lowest since 2004. And finally, oil prices are still under pressure, as we've seen crude oil prices in Nigeria go as high as $100 a barrel. That's a roundup. And Stephanie, let's get into our discussion point of the day. The question to everybody is, do you have a monthly budget? You'll be shocked how much people do not have monthly budgets, Stephanie. But the question is always, do you have a monthly budget? Now, one of the reasons I asked this question, Stephanie, is because when you look at the survey of millionaires around the world, you do find that 95% of millionaires live within their means and they budget strictly. About 75% of them budget strictly. They use grocery lists when they go to shop. So this is everyday millionaires, people who just manage to save and preserve their money. Even when I have actually managed to look through even my client base, it is at least above a 50% mark of people who have budgets on a monthly basis, while the average person, Stephanie, does not. And here's why I say that it's tough for the average person. Because, Stephanie, do you know, statistically speaking, by having cash lying around to handle an emergency or an unexpected expense, Do you know that you're then making sure that your budget is in surplus? In other words, you spend less than you make, you're out of debt, and you've got excess cash that can protect you from any emergency. Do you know that you're in the top 5% of the country if you have those three criteria? Just that, spending less than you make, having not being in debt, and having excess cash to be able to handle an emergency like a 1,000 kwacha emergency means that you are considered the top 5% of this country. What does that say to you, Stefan?
Oh, for me, I think just before I get to give my comment to you who's listening on the mainstream, do you have a monthly budget? It's 077 1616290. And if you don't, then also the question is why. Now, we do know one thing for sure is goods and services keep increasing by the day. And one of the excuses I think could be that you're not certain of what the prices on the market are. And so today making a budget has become kind of difficult. But if you don't have a monthly budget, then you can also get to tell us why on 077 1616290. However, the question is, do you have a monthly budget? Now, getting back, Mnyumba, I think what you said, I think the three aspects are very important. I think living a debt-free free life and living within your means is very important. Also, making sure that it does make sure that you live a pressure-free life. Now, it has to do with having to accept what you can and cannot afford. That's where the problem comes in, I think, Mnyumba, because then there's so much to see. There's so many things to look at in shops, as well as in terms of items and commodities. People want to live good lives, and so that failure to admit what you can afford actually comes as a negative, and so it gets to impact what you're talking about right now.
And the truth is, people want a good life, but they don't want what it costs to get there. Okay, a lot of people don't want the sleepless nights and the hard work that it costs to build that kind of an income stream in order to get there. They want it given to them in an easy way and to tell everybody to make it nice for them. But the reality is, it's not an easy economy, people. It's a tough economy. But tough economies make strong people. That's the reality. It's the good times that mess us up. But anyway, the problem, Stephanie, also that we're trying to address in this simple question, why you need to have one. I want you to think about this. Consider walking through, the most dangerous jungle in the world, Stephanie. People like to say it's the Amazon. It's that jungle just north of us, that Congo Basin. That is the most dangerous jungle.
You might want to say that again, Mnyumba. It was breaking on the other side.
I'm saying that everyone likes to say that the most dangerous jungle in the world is the Amazon. I'm telling you right now, the most dangerous jungle in the world is not the Amazon. It's that Congo jungle that's just north of us here. That place is dangerous. The animals that you find there are dangerous. And I want you to think about not having a budget. Having a budget is like driving through a dangerous jungle. Yes, you cannot get attacked by anything. So yes, you're saying? Okay. So what I was saying was that driving through a jungle is like not having a budget. Having a budget is like driving through the Congo Basin with all the gaboon vipers and all those kind of wild animals you can find in there. But you're in a car, you're protected, and you have a gun. Okay, so yes, it's not absolutely safe. It's not easy, but at least it's safe. Now, at least it's somewhat safe. Now, the not having a budget and saying no because the price of things are going up is now like walking through the Congo Basin barefoot, not a weapon, but maybe a knife in your pocket, and just hoping you'll make it through to the other side. You are more susceptible to inflation swings and emotional spending if you do not have a budget than if you do. So you just always have to remember that. So let's go through the topic of budgeting in terms of the basics. And the reason is that for you to be able to allocate savings to your future, to build your asset reserves, to build the assets that you want. Unfortunately, or fortunately, you need to exercise budgeting. Okay, that is a reality. It's an actual required thing. So good cash management, because your number one wealth building tool in this world is your income. But to adequately convert income into wealth requires a plan and a system. And budgeting is an information system that helps you with your decision making and helps you apply decision making in a more structured way to ensure that excess cash, or at least excess budgeted cash, is allocated towards building of assets for the future that you want, for your harvest, health, higher education, home ownership, and huge purchases. You cannot reach your goals, or it's very hard to reach your goals without adequate budgeting. So what is a budget? A budget is a comprehensive income, spending, and savings plan on a periodic or regular basis. Now, some people prefer to write a budget out by hand, others use spreadsheets, and others use apps. So those are your three options. You can use a book if you want. You can just pick up a book and start writing your budget, or you can write it on a spreadsheet, or you can use an application. There are not any Zambia structured applications on the market, but I'm sure that would probably be something that we all should look into as a market. The second is, what's the purpose of budgeting? Now, budgeting is not about depriving yourself. It's about controlling your money, because usually your money and spending goes out of control, because everyone always asks, but what happened to my money? I just got paid last week. What happened? What happens is that you don't have a structured plan of how you're going to allocate it. So what ends up happening is it disappears very quickly. Businesses use budgets to operate very well, and they stick to them religiously, and they put in structures to protect themselves from going out of budget too much. And that is one of the reasons why businesses are able to build wealth more progressively and more aggressively than individuals. So remember, it's a plan for all your money. And that also includes even your fun stuff. I'm going to talk about the categories behind your budget. So the idea is to make your budget as personalized as possible, leaving room to adapt. Surprise and mistakes will actually happen. So there's also contingencies that you have to put into your budget, that I would also say. So why is budgeting important? One, it encourages you to put money to work in the best way possible. That's one of the things that you actually can start to see. And it can also help you identify what's soaking up too much cash. So, but by actively budgeting, you see the weak spots. Some of these things are very subtle. People tend to not see their weak spots. That's why whenever I'm doing a client consultation, I do a situational analysis by going through 4 critical factors: someone's budget, their balance sheet, their biodata, and their beneficiaries. Yes, it always becomes memorable when the person speaking to you starts it with the first letter being the same. Trust me, it's a lot of hard work to do that. But budget, balance sheet, biodata, beneficiaries are the main things that we go through, because they give us a clear picture of where you are. And usually what I've noticed is that whenever you do a statement like that, people look and they start to see visually where their weaknesses are. And usually people are visual learners. So if they can see a chart that allocates their budget and shows them where the percentage of their money is going, they start to realize, oh, I'm spending too much money. Oh, I'm spending too much money here. Budgets also help you see where your weaknesses are in terms of things like, are you spending too much money on fixed expenses? Are you under financial stress? Financial stress means your interest payments plus your housing plus tax payments. These things that are time bound. If those things are above 30% of your income, you are under financial stress. Severe financial stress means they're more than 50% of your income. And that is what always gets you to a fractured point. And it's very difficult to build wealth when you're under the financial stress point. So budgets can also help you see if you're sticking to the guidelines of spending according to affordability. Budgets also help you show if you're spending too much on things like transportation and car ownership. They help you see if your loans are too high. So without a budget, you're not able to see where the weaknesses are. You need a credible information system to show you that. And it also helps you understand your relationship with money. Where your money flows is where your heart is. The Bible says, for where a person's treasure is where their heart is. So where your money flows the most is where your heart actually is the most. So it also shows you what your relationship with money is. And also, it actually is a strong reflection of what's your relationship with yourself. But budgeting, more importantly, helps you save for the future, get out of debt, and manage your stress. Because the number one source of stress is financial. But the problem is people they like to live in an illusion. So they don't like looking at a budget, because Budgets are grounded in reality, while the illusion of life is things will sort themselves out. So that's what people have to try and battle with. Now, steps to creating a budget is what? Set your categories and list of income and expenses. List your income, add up all your expenses, calculate your net income, adjust your expenses, and track your spending. These are the things you need to do to successfully budget. Some of the categories that we're looking at in terms of our budgets are your income. There's your fixed cash compensation. What do you get paid for at work if you go for work? Variable active income. Do you have side gigs, private projects? Are you a gig worker? Are you somebody who works on gigs? Are you a DJ maybe who gets paid every weekend? That's a variable active income. It's not a guaranteed stream of income every single month. There's also things like maybe you get a bonus at work. That's a variable income. I also have a tendency whenever we're looking at fixed cash compensation is also to look at things like your gratuity. If your workplace is paying you a gratuity and they say maybe 25% of your income, it is a form of savings, by the way. So you can put it as part of the amount that you're saving because that's auto-saved for you. Passive income as well, when you're looking at money you get from bonds, money you get from rent, money you get from stocks, money you get from royalties from a book you've written, for example. Now, let's look at essential expenses. That's the other major category. There's your taxes and deductibles that are automatically taken. There's your tithes and offerings for people who are church-oriented. Now, we have seen a bit of a debate in here. Whenever people, the tithes and offerings are also very good in helping you get better taxes because there is an actual law that allows you to get to remove your tithes and offerings from your taxable income, but it does require you to submit receipts from your church. And I've seen quite a number of church elders, church leaders who like guilting their congregants into not getting invoices from the church or receipts from the church. And they say, no, if you get a receipt, you're stealing from God. No, my friend, you are not keeping track of the money. So let me just give you some quick news here. When your pastor says getting a receipt so that you can get a tax rebate from your tithes is like stealing from God, it's simply because your pastor is not keeping records of how he or she is spending the money. So they don't want to actually start having receipts around because that forces them to actually have to keep record. So what do? The easiest thing most pastors can do if they don't want to give their people receipts is they just guilt them. Okay, and say you're stealing from God. It's the simplest way to get you off their back. Demand your receipts from your church. Okay, many of the credible churches in this country, give you receipts. Do not be fooled. Many of the credible churches in this country give receipts to their congregants because they understand the tax implications and they know that it's actually helpful. And the government did that because they were actually trying to incentivize people to be more religious about their tithing by then giving them a reward to do so. Okay, it was also as a Christian nation we were supporting the program of making sure that churches are funded because churches are critical to the fiber of society. So do not be fooled by pastors who just want to dribble you on that one. And I'm sure they'll quote as much scripture as they want. There's nothing on this because there was no government tax system when the Bible was written. Okay, so these are new laws that had to be put in place to try and help stimulate people towards tithing. Now, housing is another part of your essential expenses. Transportation is another part of your essential expenses. Clothing, basic clothing, not Gucci swag and all that. Basic clothing, food, risk, and insurance. Discretionary spending is now the things that you can enjoy. This is your discretionary savings. This is your discretionary spending in terms of this is the future plans of saving, and also your discretionary spending is things like your entertainment, your personal development, your professional services. That's your discretionary spending, the things that you really can just utilize for your own. Okay, and then eventually you should have contingency. I advise people to total up all of their expenses, total up all your expenses, and then add about 10 to 15% of them as a contingency. It's always good to have a contingency, and then also, if you can, factor in an inflation adjustment, a year-on-year inflation adjustment on your essential expenses, and you can hold a contingency amount within your budget. Then it will tell you what you are sitting on, whether you are safe or not. That gives you a clear picture of budgeting in the most comprehensive format. Now, there are two types of budgets that we often do see: the 50-30-20. 50% goes to needs, 30% goes to wants, 20% goes to the future. 20% includes saving for, that's your 20% is supposed to capture your harvest, health, higher education, home ownership, huge purchases. That's one component. There's the 425 budget. I'll talk about that just now. Now, in terms of the Fidelity Millionaire Study globally, they did find that the average millionaires actually save 34% of their income. So the average wealthy people, and they've been doing that for some time, actually save 34% of their income, of which part of that is cash. Part of that is insurance that they use for education and things like that. And part of that is their savings for their future, about 21% out of the 34%. So if you really want to peek out as to where the millionaires are, they spend 65% of their money, and they spend 66% of their money, and they save and invest 34% of their money. That's also the other thing that you could be looking for in terms of your wealth building activity. While the target budget I think everyone looks for is what I call the 425 budget, where if you really want to be happy with money, there are only 4 things a person can do with money. You can live on it, enjoy it, save and invest it, and give it away. Those are the only 4 things that a person can do with money. You can live on it, enjoy it, save and invest. You can live on it, enjoy it, save and invest it, and give it away. And the happiest person in the world is not necessarily the person with the most money. Now, obviously, I'm not saying be broke. That's not that you are not going to hear that coming out of my mouth. Do not put that in my mouth. But what I'm saying is the average person, the person who's the most happiest, is a person who can happily save, is a person who can happily spend by enjoying and living on it, and a person who can happily give some of their money. Give money to their local church, give money to celebrations when people are getting married and stuff like that. They can comfortably do that, and they can give money to alleviation of poverty for people in their family and people in their society. So basically, the average you're looking for is to give 10% to your faith institution, about 7.5% towards celebrations, and about 7.5% towards poverty alleviation. That is a person who can give 25%, live on 25%, enjoy 25% on their wants, and save and invest 25%. This is an aspirational budget, people. It's aspirational. You cannot do this from day one. Do not crook yourself. You cannot do this from day one. Start exactly where you are. But first, I think the best thing you need to do is start tracking how you are living. Go through a period of 2 to 3 months of tracking your expenses. Then you'll be able to get a clear picture on where the problems are starting. Then you can start strategizing. Too many people write fantasy budgets at the beginning. They hurt themselves. But start from exactly where you are and build towards the 50-30-20. Then eventually, when you've built enough wealth reserve and you're also building yourself up, you're going up to your 70. And then finally, one thing I also like to say when it comes to budgeting is that too many people plan their spending, but they don't also plan their income. What are you doing to invest in yourself to also increase your income? While you are budgeting, also track your income growth rates. It's actually quite important to look every month and say, what is my month-on-month growth in income? What is my year-on-year growth in income? If your month-on-month growth in income and your year-on-year growth in income are slower than your growth in spending, then your budget that is a leading cause of danger. It's slower revenue growth than spending growth. So you also want to track those and then start to implement strategies that are trying to improve the revenue component of your budget so that you can aggressively put away resources for the future. We've also got Yofista Wale, who has said, my church, in the comments there that we've gotten here today, says, my church does issue receipts on tithes. You got one of the good ones. There's some of them who are trying to basically swindle their people. They also say, and she said yes. And finally, she has said, I use the 70-20-10 type of budget. Start exactly where you are is what I say. Aspiration is to eventually get to 20. That's your end goal. You are much happier with money when you can get to 25. But start exactly where you are and make progress. Okay, as long as you're budgeting, you're doing better than 80% of this country, 80-90% to be honest. You're doing way better than the majority. Pick whichever one works for you by hand, by spreadsheet, by app, whichever. But as long as you can be consistent, my advice is spend 15 minutes at the end of every day reconciling your cash spending. If not, at least store it into the notes of your phone. Just take your phone, store it into the notes, and then at the end of the week, do a reconciliation between your bank accounts of what you spent and keep track of these things. With that, I know we lost Stephanie quite a while back. We wish you a wonderful day. God bless, and thank you to everyone for joining us today.